Washington, D.C. resident Diana Yitbarek has been surviving on unemployment checks since being laid off in April. She's been looking for work nonstop, but so far it's been a fruitless search in a country with the world's worst coronavirus outbreak.
How can you find a job and how can you make a weekly claim if everything is closed? How can you look for a job? And whenever I apply online, nobody call you.
She's one of the millions of people who lost work during the worst ever 3 months for the U.S. economy. GDP shrank by nearly a third in the 3 months to June, and no other slump in U.S. history comes close. The continuing poor economic outlook makes the uphill climb for job seekers that much steeper. Last week, new unemployment claims rose for a second straight week to 1.4 million. And for the first time since early May, continuing claims rose to 17 million, in a sign that more jobs were lost than made. On Wednesday, the Federal Reserve kept borrowing costs at zero, reflecting its pessimistic view of America's prospects.
We have seen some signs in recent weeks that the increase in virus cases and the renewed measures to control it are starting to weigh on economic activity.
U.S. presidential candidate Joe Biden is pinning the blame on the man he wants to replace. He says the downturn is a result of President Donald Trump's failure to keep the COVID-19 outbreak in check.
He's shown that he can't beat the pandemic and keep you safe. He can't turn the economy around and get America back to work.
Voters seem to agree, with Biden leading in nationwide polls and in the crucial states of Florida, Michigan, and Wisconsin. Trump won those battlegrounds in 2008. With an unprecedented economic crisis weighing on his re-election campaign, Trump could join the many Americans to lose a job come November. Paolo Montecillo, TRT World.
Well, for more, let's go to Peter Schiff in Westport, Connecticut. He's Chief Global Strategist at Euro-Pacific Capital and Chairman of the precious metals trading firm SchiffGold. Welcome back to the program, Peter. Now, before today's figures, the worst hit to US GDP was about 10% back in 1958. We now have a figure that's more than 3 times that in 2020. What's your reaction to the latest GDP data, and is the worst over?
Well, I don't think the worst is anywhere near over. I think it's going to get a lot worse, but maybe not the GDP numbers. What's going to get a lot worse is going to be the CPI numbers, the Consumer Price Index, which is going to be headed dramatically higher. And I think the real problem is not the recession, but the government's response to the recession, both the government and the Federal Reserve. The massive deficit spending and money printing is going to lead to a far greater crisis for the U.S. economy. I think it's going to lead to a dollar crisis and a sovereign debt crisis that will ultimately result in the dollar losing its role as the world's premier reserve currency. And I think that is going to usher in a period of extreme austerity in the United States.
Interesting, and we're already seeing the decline of the value of the dollar, aren't we? And the US Federal Reserve has just announced it's leaving interest rates at near zero. It's already spent trillions of dollars buying back bonds. The US government has also done the same, passing various stimulus bills worth trillions of dollars themselves. So you don't believe that stimulus then is the answer to the problems right now?
Well, stimulus is a bad name. I mean, it doesn't stimulate the economy. You're just creating inflation. You're going to stimulate higher prices, but you're not stimulating added economic output. You know, the government doesn't produce any goods or services. It just creates money out of thin air that you could use to buy the existing supply of goods and services. But with fewer people working, we're not producing as much stuff, but we're printing a lot more money. And I think the world's willingness to hold on to U.S. dollars in the form of financial assets is going to be diminished. And so the dollar's exchange rate is going to plunge. I mean, what we've seen so far is just a small taste. And what you're seeing in the gold market, with gold flirting with $2,000 an ounce and hitting a record high, gold is telling you that there is a real problem with the U.S. dollar, because gold is measuring the loss of purchasing power of the dollar And I think you're going to see the dollar plunging. So I think the price of gold is going to move dramatically higher from here. And I think that's going to result in a lot of the major central banks substituting gold for dollars as their primary reserves to back up their currencies.
Well, how much higher will gold go, do you think? Will it definitely then breach the $2,000 an ounce mark?
Oh, yeah. I mean, it's going 5,000, 10,000, 15, maybe 20. I mean, there's no way to know for sure. It all depends on when they turn the presses off. But, you know, we could print the dollar down to zero. We could destroy its value completely, in which case the dollar gold price would be infinite. But obviously, there's a lot of room between where we are now and infinity. But, you know, it is going to be a major change in the global economy when the U.S. dollar is no longer the center of the financial system and Americans can no longer run chronic trade deficits. Americans are going to have to produce if they want to consume, and Americans are going to have to save if they want to borrow. But I think it's going to be a giant relief for the rest of the world to no longer have to subsidize the American economy. This has really exacted a large toll on the global economy. America has been a big burden that the economy has had to shoulder. But I think when America has to start contributing, we have to produce if we want to consume. I think the world will be better off.
Okay, before we let you go, Peter, can I ask you about the latest jobless numbers? Because we've seen the number of Americans filing for unemployment rising for a second straight week. What does that say about the economic recovery in the US? Is it stalling?
Well, there is no recovery. We haven't recovered from anything. We're getting sicker. I expect the number of unemployed to rise, especially since we're paying people not to work. You know, it's a very powerful incentive when you pay people not to work, especially when you're paying them more money not to work than what they would earn if they actually return to work. So it's no surprise that Americans are wisely choosing to take a paid vacation over, you know, doing a job that they probably don't enjoy. But, you know, more and more businesses are going to collapse in the United States. The whole thing was a bubble. You know, the American economy was a bubble before the COVID-19 pin pricked it. And so a lot of air was going to come out. A lot of these service sector, you know, businesses are going to fail because the American economy can't support them. Americans are broke. They're loaded up with debt. Their employers are loaded up with debt. The whole nation is basically broke because of this, you know, gigantic borrowing binge that the Federal Reserve has encouraged everybody to undertake by keeping interest rates so low. We've punished people for saving and rewarded them for going into debt, which is why so few Americans have any savings and why everybody's up with debt. So this bubble was bound to deflate anyway. All COVID-19 did was speed up the process.
Okay, Peter Schiff from Euro Pacific Capital, thank you again for joining us on the program.